Hello, friends, and welcome to the third session of CA Final Level uh, Paper 8 Indirect Tax Laws classes organized by the Board of Studies of Institute of Chartered Accountants of India. I am CA Shashank Shekhar Gupta. Friends, in the first two lectures, we have covered introduction about GST. We have covered chapter 2, that is supply under GST. And today we are going to cover, or we are going to discuss chapter 3, that is charge of tax under GST. So friends, before we go on to discuss charge of GST, I had discussed in the first class that for any law to become applicable, there has to be a striking event. That is, certain event, identified event, which when occurs would render the person liable under that particular law. For example, we had discussed that section 420 under the Indian Penal Code talks about that if any fraudulent activity is undertaken, if any fraud is committed, then the person would be liable and be held liable under section 420. Similarly, for murder, there is a separate section under the Indian Penal Code which deals with that. Attempt to murder, there is a separate section. But basically, there are events on the happening of which the charge of any law gets created. And be it GST, be it income tax, there are no exceptions. They themselves are also a form of law. The only difference being that they are fiscal laws, but still they work on the same mechanism. That is, there is a particular event which is identified and the occurrence of which crystallizes the tax liability, be it could be under GST or under income tax. Let us first understand what is the taxable event under GST. So this we have already discussed in great detail in our chapter 2 related discussion, that basis for the charge of tax in any taxing statute is the taxable event, that is, the point on which the levy of tax gets attracted, and under GST, that particular event is supply. Now, supply, when I mention today, it should immediately ring a bell in your mind that supply includes any form of supply of goods and or services for a consideration in the course or furtherance of business. Okay. Next. Now, we've already discussed supply at great length. Okay. We also discussed composite supply. We've also discussed mixed supply. Now, once we move beyond that, okay, we have understood what is supply, what is composite supply, what is mixed supply. Now, let us try and understand that if a transaction is getting covered under the term supply, what would be the impact specifically under the GST laws? So, the impact under the GST laws will be, if it is an intrastate supply, intrastate meaning within the state, then CGST, that is Central Goods and Services Tax, and SGST, that is the State Goods and Services Tax, shall be applicable. If the transaction is happening within a union territory, then CGST plus UTGST, that is Union Territory GST, shall be applicable. However, if the transaction is interstate or from one state to a union territory or from one union territory to another state or from one union territory to another union territory, in such cases, IGST shall be applicable. Now, what is the extent till where CGST is applicable? Will a person based in Pakistan pay Indian CGST? Not at all. Will a person based in China pay Indian CGST? Not at all. So by default, this may sound as a very unreasonable question to you, that why am I mentioning will a person based in Pakistan pay, will a person based in China pay? But there is actually specific legal reasoning behind it. Specific legal reasoning meaning that there is a specific definition, specific demarcation under the CGST Act till where it will be applicable, and it says CGST Act extends to the whole of India. Now when I say whole of India, does that mean that it will only cover, so if I am standing in Chennai, if I am standing at the beach and just on the beach I have reached the shore, I have reached the tip of the ocean, and suddenly I take a few steps into the ocean, and then from standing from there with laptop in my hand, I provide services, say I send my opinion from there to my client, and I say that since I stepped into the ocean, I was not onto the Indian territory, and hence now the services that I have provided, CGST will not be applicable. Even better, someone says, sir, why should I stand and take the risk? I will get a small boat, I will sail into the ocean, go a bit away, and from there I will start providing services. I'll set up my office on a boat in the ocean. From there I'll start providing my CS services free of GST. Like builders mentioned, no, that they are giving completed flats free of GST. Similarly, some of you innovative students, one of you decides that, okay, I will open my office in a boat, or in Goa there are these ships, casinos, so something of that sort. So that is why it is important to understand that the territory of India is not confined to the land-based area. Okay, so India has a diagonal shape, right? Jammu Kashmir to Mumbai to Kolkata, then at the tip, down tip, it's Kanyakumari, right? So India doesn't only mean that this a diagonal shape or diamond shape, but it goes on to include its territorial waters, seabed, subsoil underlying such waters, continental shelf, exclusive economic zone, or any other maritime zone. So by this, they are covering some area into the ocean from the land base, plus the seabed and the subsoil also is also covered, plus the airspace above its territory is also covered within the meaning of India. So, Akash mein you take a flight and you provide services, you take a boat and you provide services, you stand in the Indian soil and you provide services, all of it is going to be covered. Of course, when I say in the ocean, when I say in the air, it is up to a certain limit. It cannot be indefinite, okay? We cannot say that when you are into the territorial waters of Spain, then also you are covered into the Indian GST, okay? That's not going to happen. So what is that limitation? Limitation is, friends, do you see this is the baseline? Suppose this is the beach in Chennai where I am standing at the tip. From here, till 12 nautical miles. 12 nautical miles. What is 12 nautical miles? Nautical miles is the measurement of miles on in oceans, and from land baseline till 12 nautical miles is what is referred as territorial waters of India. Then 24 nautical miles is referred to as contiguous zone of India, and up to 200 nautical miles is referred to as the exclusive economic zone. And after this, this is the area which is referred to as high sea. High sea meaning which is not a part of the Indian territory, which is outside the Indian territory. Similarly, SGST laws will be applicable to the respective state, and UTGST laws, that is Union Territory GST laws, will be applicable to the territory of that particular Union Territory. Integrated Goods and Services Tax Act extends to the whole of India, and whereas the UTGST Act extends to Union Territories, namely Andaman and Nicobar, Lakshadweep, Dadra and Nagar Haveli, Daman and Diu, Chandigarh, and other territories. Now we talk about interstate supply, which would be covered under IGST, that is Integrated Goods and Services Tax. So this is something that you wouldn't have studied as a part of your intermediate course. So here we are going to invest time in detail, because my understanding is that you would be studying it for the first time. So what all will be covered under IGST, friends? Import of goods. What is import of goods? Bringing goods into India from a place outside India. That is, import of goods, as we know in basic sense, if I'm bringing some goods from Europe, US, even Pakistan, even Bangladesh. So if goods are coming from another territory into India, from outside India into India, that would be termed as import of goods, and import of goods will be covered under IGST, liable to IGST. Supply of goods imported into the territory of India till they cross the customs frontiers of India shall be considered as supply of goods in the course of interstate trade and commerce. So what they are saying? That till they cross the customs frontiers of India. Now what is the importance of the customs frontiers of India? Friends, customs frontiers of India, the importance is that when a ship comes into India, it would park somewhere, right? Generally, they park in deep waters, so that because a big ship, big cargo ship, needs certain clearance above the seabed, only there it can park. Then there are small ferries which go to the ship, bring the goods to the docks. And at the docks, generally, there is a customs station. What is the use of the customs station? The customs station verifies whether the goods are properly being imported, proper custom duty is being paid, prohibited goods are not being imported. ऐसा तो नहीं है कि AK-47 rifles have come in a consignment, so who will check? So of course the security forces, also the customs, okay? And it shouldn't be the case that the product is covered under 28% GST, but the importer is declaring only 5% GST. So all these kinds of checks, they happen. So they are saying that when goods are deboarded from the ship, stored somewhere in the customs zone, so till the goods are cleared from customs, they do not become a part of the domestic tariff area. What is domestic tariff area? On this side of the customs. So those of you who have taken international flights, you would know that there is a green channel and red channel when you go to when you're coming back from foreign country. So green channel means that you are self-declaring that I have nothing that I have brought from outside and there's nothing duty payable with me. Whereas in the red channel, if you go, you are declaring that I have some goods which may be liable to custom duty in India. And you would have famously heard there is a duty-free area or international flights, duty-free area. What is that duty-free area? That duty-free area is basically outside the territory of India, wherein you can collect goods but no tax is charged on that because that is deemed outside the Indian territory. So the basic point is, suppose this is the customs frontier, goods have come from outside India and are stored somewhere here, that is, they have not crossed the customs frontier, they are stored here, then they would be treated not as a part of domestic tariff area, only when they are crossing the customs frontier of India to become a part of the domestic tariff area. That is where there will be a liability to pay IGST. Imports shall be deemed as interstate supplies and IGST shall be levied on the imported goods in addition to the applicable customs duty. Now friends, this we will discuss in greater detail when we move on to the customs duty part discussion. But what I can tell you, see, what is customs duty? Customs duty, the name of the custom duty was famously derived from a very old ritual that whenever a person from another kingdom was visiting the king of that particular kingdom. So suppose earlier we all know that there were kings who used to rule, right? So India was ruled by certain rulers, Afghanistan was ruled by certain other rulers. So suppose someone was visiting from Afghanistan to India and he was going to visit the Indian ruler. So it was customary for the visitor to bring some gifts and presents for the Indian king or the king that he is going to visit. So from this custom, actually the name custom duty was derived. And today the role of custom duty is, suppose I am manufacturing this AC remote in India. In India, maybe because we do not have robust manufacturing facilities, we do not have cheap raw material, and for some reason, the manufacturing cost with all the costs is coming out to 100 rupees. Okay. Same remote, my friend sets up a plant in China and he is able to manufacture this remote at a cost of 50 rupees. What is the difference? In India it is costing 100 rupees. In China it is costing 50 rupees. This person asks me, calls me and says, "Kitne ka ban raha hai tumhara? What is it that costing you?" I say 100 rupees. He says, 100 rupees. I am able to make it in 50 rupees. I will manufacture in China. I will generate employment in China. And even if I am able to sell it at 60 rupees in India, I will still beat all the competition in India. I will have a monopoly. I will control the entire market and I will generate huge profits. Which would mean that all the funds for the sale of this will effectively go to China. The domestic industry will be beaten and foreign businesses will thrive. That is why this is where customs duty steps in. Customs duty says, wait a minute. You have to cross a barrier which is known as customs barrier. I will look at your landed cost. I will analyze that with my domestic cost and I will impose such amount of customs duty, which can be customs duty, safeguard duty, anti-dumping duty, so as to ensure that your cost in India is equal to the domestic manufacturing cost, that is 100 rupees. What happens by this? That as soon as this is available in India for 100 rupees, Indian manufactured is also available for 100 rupees. That means that the domestic industry is safeguarded, their interest is safeguarded, there is a level playing field which is created, and hence customs duty plays a very important role, the protection of the domestic industry. Okay? So basically, whenever we make any imports into India, the duties that are typically applicable are, first of all, there is basic customs duty. So generally, the basic customs duty is 10%. Then over and above that, there is IGST, that is Integrated Goods and Services Tax. Now, when would a transaction be deemed as interstate supply? So we are still discussing cases where IGST is applicable, right? So one that we have discussed is import. Second, we are discussing interstate supply. Now, what would be termed as interstate supply? Transactions where location of the supplier and place of supply both are in India, but they are in two different states, or they are in two different union territories, or they are in a different state and a different union territory. So these kinds of, if it is either of these cases, then that transaction would be treated as interstate supply. Next is supply of services. When would that be treated as interstate supply? Supply of services would be treated as interstate supply. Again, more or less the same thing, that the location of the supplier and place of supply are in India. However, they are in two different states or two different union territories, or either one of them is in a state and another one of them is in a different union territory. Okay? So basically, location of the supplier has to be in a different state or union territory, and the place of supply has to be in a different state or union territory. But both of them have to be in India. Supplies from outside India. So under IGST, we have discussed import of goods, interstate supply of goods, interstate supply of services, and now we are discussing import of services. Supply of services imported into the territory of India shall be considered as supply of services in the course of interstate trade and commerce. That is, import of services will be treated as interstate supplies and hence liable to IGST. When will a transaction be deemed as import of service? Where the supplier of services is outside India, the place of supply is in India, and the recipient of services is also in India. Imports shall be deemed as interstate supplies and IGST shall be levied on the imported service. So how do we determine the supplier of, where is the supplier of service? How do we determine where is the recipient of service? How do we determine where is the place of supply? This we will discuss in great detail once we move on to the place of supply related discussion. Now, the other side of it is that under interstate supply, We have discussed import of goods, import of services, interstate supply of goods, interstate supply of services, and now we are going to discuss supply of goods or services or both in the course of interstate trade oblique commerce. That is, supply of goods or services or both when the supplier is located in India and the place of supply is outside India. So basically, we are looking at an exports transaction where services or goods are supplied and the supplier is located in India, whereas the place of supply is situated outside India. This again will be treated as an interstate supply. Now, a question may be arising in your mind. So, this transaction is export transaction. But you are saying it will be liable to IGST means it is taxable. So, friends, hold your horses. There is a concept known as zero-rated supply, which would mean that yes, while this transaction is liable to tax under GST, this transaction is liable to IGST, but because this transaction will be covered under zero-rated supply, that is why the entire tax which is applicable on this transaction will be refunded, and the entire tax incidence will be neutralized. How that will happen? We will discuss that as our course progresses. For now, the basic thing that you have to understand is even exports are covered under IGST. They are covered under the levy of IGST. Another type of supply which is covered under IGST is supply of goods or services or both to or by a SEZ developer oblique unit, meaning thereby that if suppose I am a person, I am supplying some services to an SEZ developer, that will be covered under IGST. If I am supplying services to SEZ unit, that will be covered under IGST. Now, what is the difference between SEZ developer and SEZ unit? SEZ or special economic zone. So, what happened was, let me get you into slight history. Government wanted to promote exports. In fact, government has always wanted to promote exports from India. And the reason that every government wants to promote exports from India is because exports earn precious foreign exchange. And that foreign exchange is something which determines that how strong are we as a country, how economically sound are we as a country. So government started thinking, how can we take some more steps to promote exports out of India? That is where they identified and developed a concept by the name of special economic zone. What is special economic zone? Special economic zone is a customs bonded area wherein even though it may be situated within India, like in Noida, in Bangalore, in Pune, in Mumbai, in Hyderabad, but any activity, any supply which is made by such SEZ, first of all, if I were to say I want to open an office in an SEZ, I cannot open an office. Why? Because I am a chartered accountant providing services within India. Who can open an office? Who can open a factory in SEZ area? 100% exporter can open his factory, his office in an SEZ area. What is the benefit of opening the factory or office in that SEZ area? No tax will be charged, meaning thereby, if you are purchasing anything from outside India, it will be free of custom duty. If you are purchasing anything from domestic area, free of tax GST. Whatever supplies you will make, you can directly make the clearance to outside India, meaning thereby you will get a speedy clearance. But you need to make sure that 100% of your revenues are coming from exports in forex. If there is any proportion of your revenue received which is not coming in forex, such amount will be liable to heavy taxes. So I'm not going into too much detail because that is not required. I'm just giving you an example that what is actually a special economic zone or SEZ. So special economic zone, short form SEZ, is what you can say a small cluster, right? It's a small cluster wherein all export units set up their bases, undertake operations and send goods or services to outside India. So again, because government wants to give them the benefit that is free of tax supplies. So how they do that? Any supplies to SEZ also are covered under zero rated supply. Zero rated supply meaning that the entire tax is either given as refund or available as input tax credit. That we will discuss later. But today what we are discussing is supplies to SEZ developer. Now SEZ developer could be, I am a builder. I am not an exporter, I am a builder. I have 100 acres of land. I demark that area as custom bonded. A custom office is opened and I construct high-rise buildings and I ask exporters to come and take the area on lease, sell the area to them. So basically, in the form of a builder, I am an SEZ developer. Once I have developed that area and actual exporters are sitting there, that area is known as SEZ unit. And supplies, I could be supplying services to SEZ developer or an SEZ unit. Both of these will be covered under IGST and vice versa. If SEZ developer is supplying goods or services to me, if SEZ unit is supplying goods or services to me, that would also be liable to IGST. So hypothetically in your mind, what you can think is that hypothetically for tax purposes, SEZs are treated as a territory which is outside India. Lastly, supply of goods and or services or both in the taxable territory not being an intrastate supply and not covered elsewhere in this section. Very important when I say you will immediately start thinking now, this will come in the exam, right? This will come for 2 marks, 5 marks. That is not what I mean when I say it is important. Important meaning important from practical purposes, important from legal purposes. If it comes in exam, very well. So basically, the point that I am trying to highlight here is that IGST is the residuary levy. Residuary levy meaning if you have a confusion whether a transaction should be treated as intrastate supply meaning liable to CGST plus SGST, or interstate supply meaning liable to IGST. So how do we determine? And if we are not sure that, okay, I'm not sure, but it is certainly not intrastate supply, it is certainly not liable to CGST plus SGST. In such cases, you can take recourse in this particular clause wherein it says that if a transaction is not covered under intrastate supply, in such cases, it will be covered under IGST or treated as interstate supply. Now, we move on to discuss intrastate supplies. And intrastate supplies, it says, where the location of the supplier and place of supply are in the same state and union territory, then that will be treated as an intrastate supply, and such intrastate supplies could be liable to CGST plus SGST. So basically, where the location of the supplier and place of supply are in the same state or union territory, in such cases, the transaction will be liable to CGST plus SGST. However, there are some exclusions. Exclusions meaning that even if the location of the supplier and place of supply are in the same state, that is, suppose I am situated in UP, I am situated in Noida, and I am supplying services to an SEZ unit or developer which is also in Noida, not only in UP but in the same district. Can I say that this transaction will be liable to CGST plus SGST? No. Why? Because it has been specifically mentioned that supply of goods or services to or by SEZ unit developer will be covered under IGST. Second, supply of goods made to a tourist. Tourist meaning that, friends, what happens is when these foreigners come to visit India, so they're traveling, they buy some souvenirs, they buy some goods they like in India, and they generally want to take it back as a memory with them. So it is an international concept that can a country earn foreign exchange only when the goods are actually shipped out of India? Can it not happen that a person visits from United States to India, he travels within India, he buys some souvenir of the Taj Mahal and he pays in US dollars, then in that case, is it anything less than the export? Is that tourist not actually helping the country earn foreign exchange? It certainly is. And that is why, for the cases where the tourist is actually going to take these goods out of India and is a tourist traveling on a foreign visa, and visa meaning which is not valid for more than 6 months, such a person will be treated as a tourist. Now what this tourist will do is, he will show his passport with his visa, and accordingly the seller who is selling the goods to this tourist will immediately issue a IGST invoice. Why so? Because when this tourist pays this IGST, when he is about to travel back to his country, from the airport, he can claim a refund of this IGST. Thus, two benefits. One benefit is that the government, the country, the business owners are earning foreign exchange. Secondly, the tourist is getting a refund of his taxes and hence he is getting his goods in India at a comparatively better rate. And that is why, for the ease of governance of this entire set, it has been specifically mentioned that when goods are being sold to a tourist may be standing in your shop, still you will raise a IGST. And lastly, goods imported in India. So goods imported meaning someone may say, I am living in Mumbai, I am doing business in Mumbai, I have imported goods from Nhava Sheva. Nhava Sheva is within Mumbai, Maharashtra. Why IGST? It should be CGST plus SGST. Doesn't matter. Your office may be right next to the Nhava Sheva port office, but still goods imported in India will be liable to IGST. Next is supplies in territorial waters. What does this mean? Section 9 says, notwithstanding anything contained in this Act, where the location of the supplier is in the territorial waters, the location of such supplier, or where the place of supply is in the territorial waters, the place of supply shall for the purposes of this Act be deemed to be in the coastal state or union territory where the nearest point of the appropriate baseline is located. Meaning thereby that I gave you an example now. That's one of you intelligent students. You become a chartered accountant and you decide I will give GST free services. And you open an office on a boat and your articles are coming to your office on a small water ski. So my imagination is going all over the place now. So, and that is where you say that you may be living in Chennai or Kanyakumari and you say, while I reside there, my home is there, but my office is in the territorial waters. Okay? So they say, gentlemen, doesn't matter. What is the coastline, which coastline is applicable here? So in Chennai, it will be Tamil Nadu. In Kanyakumari, it will be that respective state. And accordingly, you will be liable to tax within that state. So they are saying basically, when you have to decide that how do we determine which state's tax to be payable or which union territory's tax to be payable. Suppose someone is close to Pondicherry's baseline, then that person has to pay Pondicherry, will be covered under Pondicherry UTGST. And suppose someone is close to the Madras baseline, then that person will be covered under Tamil Nadu GST. Next is levy and collection of CGST/IGST. So, when is CGST to be levied and when is IGST to be levied? Now, before we go on to discuss this, let me first quickly see if there are any queries, and thereafter we'll move on to discuss the rest of the session. Good evening, Ambika. Vijaya, I'm fine, thank you. Ayush says, request you to please display PPT in full screen. I had displayed in full screen only. Was there any issue? Manali is asking, sir, is there limit of custom frontier like territorial area? Manali, can you please detail your query? I am unable to get what you are trying to ask. Ambika is asking, sir, what if services is availed by tourists? So, Ambika, this services and everything, so basically we'll be covering this in greater detail when we discuss about exports in greater detail, okay? But generally these cabs and everything are not eligible. It's largely, so basically you have to prove that you're carrying those goods with you, okay? So because the government also wants to keep some check. Now keep some check meaning that when you show that I purchased this souvenir of Taj Mahal and this is the bill and this is my payment slip and this is the tax. Now at the airport they will ask, okay, show me the souvenir. And when you show the souvenir, they will be convinced, okay, that you availed this, right? But this cab and everything, this is consumption within India, right? Plus, this can also result in tax evasion tomorrow, right? Because they can never verify whether you actually took it or not. So, that is why it is largely restricted to goods. Mansi is asking, IGST to be paid in addition to customs duty? Yes, Mansi, don't worry. When we move on to customs, I'll tell you in detail. What I can tell you right now is, suppose 1000 rupees is the value of any imported goods. So on 1000 rupees, 10% will be customs duty. 10% custom duty meaning what? That 10% of 1000 will come out to 100 rupees plus suppose 18% GST is applicable, so 180 GST. So the total tax will be 100 rupees basic custom duty plus 180 rupees GST, total 280 as customs duty, with its breakup being 100 rupees custom duty and 180 rupees IGST. Darshan is asking, sir, how does a tourist claim refund of IGST? So this I just explained, Darshan. So when you go abroad, suppose you become a chartered accountant and you get married, and for any other reason you'll go abroad and you'll buy things, make sure when you buy things, you mention there, because there is a certain limit also, that you have to buy above this, only then they will give you a VAT certificate. Suppose you travel to Europe, so there if you purchase above 100 euros, then is where the shopkeeper will issue a stamped signed certificate that you can claim a VAT refund. Then there you have to pay the VAT, EU VAT. Then when you go to the airport, there is a separate counter for giving such refunds. They check your invoice, they check your goods, and accordingly they process your EU VAT refund. And similar would happen in India also. Sridharan is asking, please explain status of Ladakh for GST purpose. My dear friend, Ladakh, as we all know, has become a union territory. So if a supply is happening within Ladakh, it will be CGST plus UTGST. And if it is happening from Kanchipuram to Ladakh, it will be IGST. Or from Ladakh to Kanchipuram, again it will be IGST. Yes, Ravi, I am fine now. Thank you. So with this, we have concluded the queries. Okay. So let us move back and resume our session related discussion. Is the PPT clearly visible to you in full screen? Can some of you please confirm? Can some of you please confirm that PPT is visible to you fine? Nobody has answered. I mean, 2 or 3 answers would also be fine. Are you able to view the PPT clearly? Okay, alright, great. Even otherwise, let me tell you that state-specific discussion, most of the state laws are based alike to CGST laws. Okay, so majority of provisions are borrowed from CGST itself. Now here, why I was saying these are two separate things, because levy and collection of CGST or Central Goods and Services Tax is provided by Section 9 of CGST Act, whereas levy and collection of IGST is provided by Section 5 of IGST. So what does it say? It says CGST/IGST to be levied on all interstate supplies of goods and or services except on the alcoholic supply for human consumption. So this we had already discussed, that alcoholic liquor for human consumption has been constitutionally kept out of the purview of GST, right? So if it is an intrastate supply meaning happening within a particular state, that would be liable to CGST plus SGST. However, if a supply is happening interstate, that would be liable to IGST. On the value determined under Section 15 of CGST Act. So basically, Section 15 of CGST Act is another specific section which talks about valuation, and that is where we'll discuss a concept of transaction value. There is a separate chapter on valuation wherein we will discuss this section 15 in great detail, but right now just let us, all that we need to understand is that CGST leviable on intrastate transaction, IGST leviable on interstate transaction, plus on the value which is determined under section 15. So what is the relevance of this under section 15? Actually, you may be charging 10 crore rupees. But if section 15 says that the value will be 100 crores, then the tax has to be paid on 100 crores. And vice versa. You may actually be charging 100 crores. But if section 15 says that it is only 10 crores, then you need to pay tax only on 10 crores. So that is the relevance of this section. Next it says, at such rates notified by the central government, not exceeding 20% for CGST and 40% for IGST. So what is the maximum rate of tax which can be there under GST? The maximum rate of tax which can be there under GST is 40%. Compensation says is something different over and above. But tax, when I say, so tax could be maximum 40%. So if it is IGST, it will be single IGST 40%. If it is CGST plus SGST, it will be 20% CGST and 20% SGST. However, that is up to where the GST tax rate can go up to. But presently, the maximum tax rate which has been made effective. So today, maximum rate of GST which is applicable is 28%. So basically they have said that if we want, we can bring it up to 40%, but the maximum point till where tax is being levied presently under GST is this 28%. So 28% if it is IGST, and 14% CGST plus 14% SGST if it is a intrastate supply. Now, within GST, there are multiple rates which are notified. First is 0%. Second is 0.125%. So, why 0.125? Because it is CGST only. So, when I say CGST, automatically you should presume that similar amount will be there under SGST. So, 0.125 under SGST, and if under IGST it will be 0.0. I am also calculating in my mind, so you can also do that. So it will be 0.25. Similarly, 1.5% under CGST, 1.5% under SGST, and effective 3% under IGST, 2.5% under CGST, 2.5% under SGST, effective 5% under IGST, 6% under CGST, 6% under SGST, effective 12% under IGST, 9% under CGST, 9% under SGST, effective 18% under IGST, and 14% under CGST, 14% under SGST, effective 28% under IGST. And who will be liable to collect and pay this tax? Because GST is an indirect tax, will have to be collected and paid by the taxable goods. So friends, what you see in this section actually has a great learning from the past. Learning from the past, in fact, there is a principle with respect to taxation which says that there can be no taxation basis presumption. So basically, any tax levy has to be, so there is to be complete clarity when any tax is to be levied about the tax rate at which it will be applicable, about the value on which it will be applicable, and the person who will be liable to pay the tax. If for any reason the value is not clearly defined, if the tax rate is not clearly defined, if the person who's liable to pay such tax is not clearly defined, if either of these are not present, then in such case, there can be no levy of such tax. This is a settled legal principle. Okay? So this is what, and that is why we see that under section 9, under section 5, they have specifically mentioned that where will the value come from, what will be the tax rate, can be the tax rate, and who will be liable to pay such tax. Next it says, on supply of petroleum crude, high-speed diesel, petrol, natural gas and aviation turbine fuel. So what is this basically? These are 5 different kinds of, you could say, petroleum items, and presently they are outside the purview of GST, but there is a discussion that they should also be brought within the net of GST, and so GST Council will decide that since when they will come under the gamut of GST, and once GST Council decides on that, thereafter these will stand covered under the levy of GST. Now continuing the section, it says that while we are prescribing that how IGST, CGST and will be applicable, and generally it will be the person who is making such supply who will be liable to collect and deposit this tax. But we are at the same time, we are empowering the council meaning GST Council, to specify certain supplies on which it will be the liability to pay and deposit such tax will be shifted from the supplier to certain other specific person. And what are those cases? First is covered under section 9 subsection 3 of CGST Act or section 5 subsection 3 of IGST Act. It says the categories of supply of goods and or services on which reverse charge shall apply, that is, recipient shall pay the applicable tax. So, under reverse charge, so this is a specific category of reverse charge. There are notifications, and notifications prescribe that in what case of supply of goods it will be the recipient who will be liable to pay. In what case of supply of services it will be the recipient who will be liable to pay. So there are certain specific categories which have been prescribed, and that we are going to discuss in our today's session. Next it says, class of registered persons who shall pay tax on receipt of specified categories of goods or services or both from an unregistered person. So this was slightly unreasonable kind of compliance which was added under GST. If you read it carefully, it says, if I as a registered person under GST am making any purchases, any procurements from an unregistered person, I as a registered person would be liable to pay the applicable tax under reverse charge. So here, earlier when GST was implemented, that is on July 1, 2017, this was largely applicable pan-India, which meant that even if I had bought the refill for this pen, and for some reason I had bought it from a small shopkeeper who was not registered under GST, I would have to pay the applicable GST on that refill. Of course, there was a daily threshold, but I'm not going into that because that is an old thing, not part of your course. So this is slightly unreasonable, and that is why it was suspended in 2017 itself. And as on date, while this section is applicable, but it has a very limited applicability. Okay? So what is that applicability? What is the transaction covered? That we will discuss. Next it says, specify categories of services on which tax will be paid by e-commerce operators as if to DLF Mall, Lodha Mall or any other mall, and you bought a shirt or a trouser from Shoppers Stop. So legally, contractually, who have you bought that shirt or your trouser from? Have you bought it from Shoppers Stop or have you bought it from that particular mall? If there is a defect in that shirt or trouser, you will return it to Shoppers Stop or will you go to the mall management that I had bought it from your mall, you will exchange it. The point that I'm trying to make is, a mall is basically a marketplace created by a builder for various sellers to come and lease space, set up their showrooms, and when so basically he is given a platform. Sellers are coming and setting up their shops. Buyers are coming because they can go to a common place and buy things that they want to buy. They buy from the shopkeeper, they pay the shopkeeper, and the simple role of the mall is that he is charging rent from such shopkeepers. Similarly, e-commerce operators are nothing else but virtual malls. Meaning, Snapdeal, Flipkart, Amazon, they've all created a website wherein they ask various sellers to come and register with them and list their products. Now what happens? When you click online that you want to buy this product, Flipkart says I am selling, Amazon says I am selling, Snapdeal says I am selling. When you click on that link, it shows that you can buy this mobile phone for 50,000 rupees from this seller and 10 other sellers. So one seller is Amazon verified, 2 sellers are not Amazon verified, 3 other sellers are selling it but selling it expensive. So basically, e-commerce operator is giving a platform. For every sale, he is facilitating sale transaction, giving marketing, facilitating transportation, collection of money, and then paying it back to the seller. The invoice, if you see for online buying, is coming from the seller to you and it has no relevance with the e-commerce platform. Similarly, Urban Clap, when you call for some services at your home, Urban Clap lists certain vendors and they are providing those services to you. So this entry is specific to services that e-commerce operators can be made liable for specific services to pay the applicable tax as if they are the suppliers. So here I am resting our discussion. I am taking a break for 10 minutes and it is 7:05 or 7:06 in my clock. We'll reconvene our session at 7:15 or 7:60. So see you after the break. So, can we reconvene the session? So, reconvening our session, now we are going to talk about notified goods under reverse charge. And the notified goods under reverse charge are, so this we are talking about specific goods which are covered under reverse charge wide section 9 subsection 3. And the goods covered are, first is cashew nuts not shelled and peeled. Now there are three conditions for any supply of goods to be covered within reverse charge. First is specific description of goods, so the goods should be covered within that description. Second is that the supplier should be covered within the specific description of the supplier. And third is that the recipient should be covered within that category of being a recipient. So first, description of goods, it says cashew nuts not shelled and peeled. Who should be the supplier? Agriculturist. Who should be the recipient? Any registered person. So basically, an agriculturist, when supplying cashew nuts not shelled and peeled to a registered person, it will be the registered person who will be liable to pay the applicable GST under reverse charge. Similarly, weedy wrapper leaves, or they are often referred to as tendu leaves, when supplied by an agriculturist and the recipient being any registered person, it will be the recipient who will be liable to pay the applicable tax under reverse charge. Tobacco leaves, again, if the supplier is agriculturist, the recipient is any registered person, it will be the recipient who will be liable to pay the applicable tax under GST. Similarly, silk yarn, the supplier is a manufacturer of silk yarn and the recipient is any registered person, such registered person will be liable to pay the applicable tax under reverse charge. So friends, what do I mean when I say reverse charge? Reverse charge is, this is Mr. A and this is Mr. B. Mr. A is supplying goods to Mr. B. For that, suppose the goods value of goods is 1 lakh rupees. The applicable tax rate is 18%. So 1 lakh rupees value plus 18% of GST, that is 18,000 GST. 1,18,000 A will charge from B. In this case, when a transaction is covered under reverse charge, the supplier is only concerned with this value, that is 1 lakh rupees, and it is the recipient who has to pay 1 lakh rupees to Mr. A plus pay the applicable tax on this transaction under reverse charge. Thereafter, this person can claim the input tax credit of such amount of tax paid under reverse charge. So this you would have also studied in your intermediate course, but still, just to bring in more clarity. Next is supply of lottery, and lottery is now strictly governed by state governments. So state government, union, territory or any local authority, if they are the supplier, then the liability to pay the applicable GST will be on the recipient being lottery distributor or selling agent. Next is used vehicles, seized and confiscated goods, old and used goods, waste and scrap. And if they are being supplied by the central government, state government, union territory or a local authority, and the recipient is any registered person, it will be such recipient who will be liable to pay the applicable GST under reverse charge. Next is priority sector lending certificate. So for the priority sector lending certificate, the law says that if the supplier is any registered person and the recipient is any registered person, so what is priority sector lending certificate? This is applicable between banks and financial institutions. We had discussed in great detail. So this priority sector lending certificate, the applicable GST is to be paid by the recipient under reverse charge. Now we move on to discuss services covered under reverse charge, primarily under section 9 subsection 3 of CGST Act. The services which are covered are GTA services wherein the GTA has not paid CGST at the rate of 6%, meaning thereby that where the goods transportation agency has not paid tax effective at the rate of 12%. In such cases, if the recipient of such GTA service is either of these, that is a factory, society, cooperative society, registered person, body corporate, partnership firm, casual taxable person, then if the recipient is covered under either of these categories, such recipient will be liable to pay the applicable GST under reverse charge. However, if the GTA has charged tax at the rate of 12%, then such recipient is not liable to pay the applicable tax under reverse charge. One more thing that you need to keep in mind is that reverse charge in case of GTA services is not applicable in case of Department of Central Government, State Government, Union Territory, Local Authority and government agencies registered only for purposes of TDS. So basically these all departments are required to take separate registration under GST specifically for the purposes of deducting tax at source under GST. Like there is a TDS under income tax, similarly there is a TDS under GST, and that we will discuss in detail later. But here what you need to understand is that in case of GTA or Goods Transportation Agency service, GST is to be paid under reverse charge if the supplier has not charged tax at the rate of 12% effective and the recipient is either of those specified recipients. Now what constitutes a GTA? So for any supply of services to qualify, any transportation service to qualify as GTA, a consignment note must have been issued. So consignment note is a must for a transportation service to qualify as GTA service. Next is legal services by advocate, that is an individual advocate including senior advocate or firm of advocates. The recipient, if it is any business entity located in the taxable territory, it will be such business entity which will be liable to pay the applicable GST under reverse charge. Services supplied by an arbitral tribunal to a business entity. What is an arbitral tribunal? So this is a specific type of, you can say, local code, which specifically caters to matters pertaining to arbitration. So these kinds of arbitral tribunal, where the supplier of services arbitral tribunal and they charge some fee, so they're providing some services, it is the recipient of such service who is liable to pay the applicable tax under GST. Now for GTA, there is this summary chart, like we had prepared one for import of service. Similarly, there is a summary chart for GTA service. For GTA service, first, if the GST is paid at the rate of 12%, then the tax will be applicable on forward charge basis, and the supplier GTA will be liable to pay the applicable GST. However, if this is not the case, then in another case, that is the case of reverse charge, GST is to be paid at the rate of 5%, wherein if recipient is one of the specified recipient, that is factory, cooperative society, partnership firm, company, here reverse charge will be applicable and person liable to pay GST will be such recipient. However, if recipient is other than specified recipient, that is unregistered individual and consumer, that is, suppose if any of your parents, they have a transferable job, so they would have been transferred from one location to another, and for transportation generally the house belongings are also shifted, so there again GTA services are availed, but that would be covered under unregistered individual and consumer, and hence no liability to pay the applicable tax on such unregistered individual and consumer, and this is also specifically exempt from GST by notification number 12/2017. Okay. Next is sponsorship service. Just a moment. With respect to the sponsorship service, it says any person providing sponsorship service, if the recipient is body corporate or partnership firm, such body corporate meaning company, will be liable to pay the applicable GST under reverse charge. So very recently, IPL, the title sponsorship rights for IPL, there was, I think, Oppo or Vivo, a Chinese company which had the title rights, and because of this anti-China sentiment, they were discharged from title sponsorship, and it was open, the title sponsorship was offered to Indian companies, and one Indian company which is into virtual gaming, that company has taken up the rights. So basically sponsorship is what you see on the vest of Virat Kohli, Oppo, Vivo, or any local Patanjali or whatever advertisement that they do on the bat of such an MRF. So this is known as sponsorship. Now this sponsorship generally BCCI gives the right for such sponsorship. So BCCI becomes the supplier. Who's the recipient? The recipient is Oppo, Vivo, Patanjali, or whichever company is taking those sponsorship services. So basically, for these cases, the liability to pay the applicable GST has been shifted onto these recipient companies. Next is service supplied by central government, state government, union territory, or local authority to a business entity, excluding renting of immovable property or services such as postal services, insurance and agency services, services provided to an aircraft or ship inside or outside an Indian airport or port, transport of goods passengers. In such cases where the supplier of service is central government, state government, union territory or local authority, the liability to pay the applicable GST will be on the business entity, that is the recipient of service. So friends, where this term business entity comes now, what we need to understand is, suppose there is a business entity doing only 10 lakh rupees worth of business. But, so 10 lakh rupees worth of business meaning they are not liable to obtain registration under GST. But, if they are covered under this reverse charge category, that is, they have taken services from the central government, state government or union territory, and because of this they have become liable to pay the applicable GST under reverse charge, then due to this transaction, they will be forced to obtain registration under GST and not only pay tax on such transaction under reverse charge, but to also charge GST thereafter on every transaction. So basically, being covered under the liability to pay tax under reverse charge is a mandatory condition for registration, and if a person is covered under registration, then such person will not, they cannot claim the benefit of the registration threshold. Renting of immovable property service. In this case, if the central government, state government, union territory or local authority is providing renting of immovable property service, then here it says any registered person. Do you see the difference? Earlier it said, why have I kept it separate? Here also central government, state government, union territory or local authority. Here also central government, state government or union territory or local authority. But here it talks about business entity. Could be registered, could be unregistered. But here it says it must be a registered person. So, if not already registered, not liable to pay under reverse charge. If registered, then liable to pay under reverse charge. Next, services offered by a director to their own company. So, when a director is providing services, basically sitting fees paid to a director, any commission paid to a director. Please note, there are two kinds of directors. One is a director who is not in full-time employment in the company. He only is on the board of directors, and whatever services he provides or sitting fees is paid to him, on that the company is liable to pay the applicable GST under reverse charge. But if it is a director who is in full-time employment and he is paid certain amount as salary on which TDS is deducted like for any other employee, then no reverse charge will be applicable on such salary component. Why? Because that is where the employer-employee relationship comes in, and the director will not be liable to pay any amount as, and the company will not be liable to pay any amount of tax under GST under reverse charge. Next is services by an insurance agent to person carrying insurance business. So here, one insurance company will have 10,000 insurance agents. Now either cover these small insurance agents 10,000 compliances, or simply cover one insurance company. Which is better? From compliance, from governance, from checking, one, right? So that is why the liability from insurance agent has been shifted to the insurance company. Similarly, in case of recovery agent, the liability has been shifted to the banking company, financial firm, or NBFC located in the taxable territory. Next is transfer or giving permission to use, that is intangible, of copyright content. So Badshah has made a song, any author has written a book, any photographer has taken a famous photo, any artist has developed some copyrighted thing, and when they are giving the economic exploitation rights, in such case, the liability to pay the applicable GST under reverse charge has been fixed on the publisher, the music company, producer of the like located in the taxable territory. With respect to the author, there has been a recent change. So earlier, authors were blanketly covered under reverse charge, wherein, suppose I write a book on GST, I give it to taxman to publish the book, taxman publishes the book, gives me royalty. On that royalty, taxman is liable to pay the applicable GST under reverse charge. And this was the only option earlier. But now, another option has been given by a recent amendment, wherein I, the author, can charge the applicable GST on such publication rights, charge it from the publication company, and deposit it with the government. But there are certain conditions. Conditions are that the content should be covered under section 139 1A of Copyright Act. That is, under Copyright Act there could be various sections, like 139 is this one only, right? So it should be specifically covered under this section. Here you can you should learn this section because there could be a trick question also. Secondly, if the author chooses to pay, he has to take registration under GST along with filing a declaration that he is exercising the option to pay CGST on said service under forward charge, and will continue with this option for at least a period of 1 year from such date. And he also needs to make a declaration on the invoice which he will issue in prescribed form to the publisher. There are two conditions. First condition is that he needs to obtain registration, file a declaration, continue for a year, and fourth, on the invoice also, he should clearly mention that he is charging the tax under forward charge and the publisher is not required to pay the said tax under reverse charge. So this is a recent thing that you should all remember and learn for the examination purposes. Next is services supplied by member of overseeing committee of RBI. So there's a specific member of committee, overseeing committee, and overseeing committee are providing services to RBI. It is RBI who is liable to pay the applicable GST under reverse charge. Similarly, direct selling agents providing service to bank or non-banking financial company. So what are these DSAs, direct selling agents? They help in selling the products of the company, could be loan, could be extending credit facility or anything of that sort. In such cases, individual direct selling agents, other than a body corporate partnership or LLP firm, the recipient of service, that is the banking company or non-banking financial corporation located in the taxable territory, will be liable to pay the applicable GST under reverse charge. Service provided by business facilitator to banking company. So business facilitator who keep pushing you, sir, credit card le lo, sir, loan le lo, loan transfer kara lo, open a bank account with us, this, that. So all of these, when they're providing services, the banking company has to pay the applicable GST under reverse charge. Next is agent service. An agent of business correspondent has to pay the applicable GST under reverse charge, and also an agent of the business correspondent providing services to a business correspondent, the business correspondent has to pay the applicable GST under reverse charge. Security services. So if any entity is providing any security services, in such case, and this provider is any person other than body corporate. So if it's a company providing services to another company, then not covered under reverse charge. The supplier of service has to charge the applicable tax and the recipient has to pay. So these are small little tiny things which are important to remember, because this can result in a trick question testing your memory in exams, and there you may recall, okay, security service covered under reverse charge, but you may skip reading A Limited provides security services to B Limited, which means that a body corporate is providing security services to another person. Security services are there, but since the supplier of service is a company or a body corporate, and hence the company will be liable to pay the applicable tax under forward charge, and the recipient, that is B Limited, will not be liable to pay the tax under reverse charge. So, security services, supplier is non-body corporate, recipient is a registered person. So again, unregistered person, then no reverse charge. Registered person, then reverse charge. And this is not applicable if such security services, so security service you can see is provided to private entities as well as government entities also. So if security services are provided to central government, state government, union territory, local authority, governmental agency, compensation person, then reverse charge in case of supply to these agencies or governments, no reverse charge will be applicable. Next is transfer of development rights or floor space index for construction of a project by a promoter, meaning thereby that suppose any person, suppose I have a very big tract of empty land in the heart of Delhi. It is lying vacant. DLF or Lodha, some other prominent builder, comes to know about that land, approaches me that let's do one thing. You have a very good piece of land with you. I have the expertise to develop high-rise buildings and sell them to buyers. Let us do one thing. You keep the ownership of this land with you. You transfer the development rights to me. And I will construct 200 flats, 300 flats on this. 150 flats I will give to you. 150 flats I will retain with myself. So basically, this is the kind of transaction that we are talking about. So supplier of service is any person. Recipient of service is promoter builder. So that promoter will be liable to pay the applicable GST on the value of such transfer of development. Similarly, I don't give the development rights to him, but I say I can give you my land on lease. That is, for 99 years I am giving my land on lease to you. When the lease expires, the land will come back to me. In such case, long-term lease of land, that is 30 years or more, against specified consideration, so there is a consideration attached to it. Supplier is any person and the recipient is the promoter. In such case, again, the promoter will be the person who will be liable to pay the applicable GST under reverse charge. And all these services are covered for reverse charge under intrastate supplies, where CGST and SGST will have to be paid by the person covered under reverse charge. And if these are interstate services, then IGST will have to be paid by the recipient of services. Some new services which have been recently added into the gamut of reverse charge are renting of motor vehicle services to a body corporate. So when I and you obtain a vehicle on rent, that is not covered here. Renting of motor vehicle services to a body corporate meaning company, where supplier is someone other than body corporate. So it has to be, could be LLP, it could be partnership firm, it could be individual, it could be HUF, who's paying tax under GST at the rate of 5%, that is CGST 2.5% plus SGST 2.5%. Input tax credit only of input service in the same line of business. So input ITC will be available only of the input service in the same line of business. So basically, if this supplier of renting of motor vehicle services is not a body corporate, is paying tax at the rate of 5%, is availing only input tax credit of the same category of services, that is renting of motor vehicle only, is supplying services to a body corporate, if these four conditions are met, then it will be the recipient of service, recipient meaning recipient body corporate located in the taxable territory, who will be liable to pay the applicable GST under reverse charge. Next is services of lending of securities under securities lending scheme of SEBI. So here what used to happen, let me first read it out and then I'll give you the background. Lender, a person who deposits the securities registered in his name or in the name of any other person by being duly authorized on his behalf with an approved intermediary for the purpose of lending under the scheme of SEBI. And borrower is a person who borrows the securities under the scheme to an approved intermediary of SEBI. So what used to happen was, suppose I have securities which I want to lend to some other person. I don't have someone who is willing to take such securities for lending purposes. So I approach an intermediary, and that intermediary facilitates this transaction of lending of securities. So he connects me, the lender, and he connects the lending. Okay, the borrower. So basically, the person who's giving, lending the securities, and the borrower. What used to happen was, once I've done this transaction, I get to know that there is another person. Suppose I am Mr. A and Mr. B is the intermediary, and he connects me with Mr. C. Why am I mentioning any random names? Okay. So suppose Ravi Sadhyan wants to lend some securities. Shri Raksha is the intermediary and Hiba Khan is the borrower. Now the first time, Ravi does not know who Hiba Khan is, okay? But once Ravi has given some securities on loan to Hiba, Hiba gets to know Ravi, and Ravi gets to know about Hiba, that Hiba takes securities on loan and Hiba knows that Ravi gives securities on loan. Thereafter, if they have to do any transaction, they would not necessarily approach Sri Raksha, right? Why? Because they are already knowing about each other, and hence the whole business model was put to challenge because of this connection. And why would Ravi need details of Hiba Khan? Because Hiba would want to avail the credit of GST, right? So, and Ravi would have to raise an invoice in the name of Hiba. So that is why this reverse charge was introduced here, where lender so that is why the liability to pay the tax has been shifted onto the borrower. No need to connect with the person who owns the securities, and simply the borrower can pay the applicable GST under reverse charge and self-avail the input tax credit for its own benefit. Some clarifications. So one clarification has been issued by Circular number 13/2017, dated October 27. It says, mere cutting and packing of fabrics into pieces of different lengths from bundles or thongs will not change the nature of these goods, and such piece of fabrics would continue to be classifiable under the respective heading as the fabric. So basically, if you have gone to any shop which keeps clothes in meters, so your parents would have been buying it or your grandparents would have been buying it. So there they keep a complete roll of clothes, they show it to you, then if you want it, they cut the desired length for you. So it has been said that mere cutting and packing of fabrics into pieces of different lengths from bundles or thongs will not change the nature of these goods, and such piece of fabrics would continue to be classifiable under the respective heading as the fabric. So it will not change their classification. So these are some random things which are coming in, but the reason we are discussing it is because this is a clarification. It's specifically covered under your study material. It's slightly away from the flow, but still important to discuss. Securities lending scheme. So this we already discussed. That clarification regarding taxability of supply of securities under securities lending scheme for the past period, that is 1st of July 2017, from when GST was implemented, to 30th of September 2019. GST is payable under forward charge by the lender, and request may be made by the lender to SEBI to disclose the information about the buyer for discharging GST under forward charge. Why is it important for him? To know whether he is to charge CGST plus SGST or IGST. And even the borrower can say the same if he wants to avail ITC. So as to do away with disclosure of such information, from 1st of October 2019, the borrower of securities has been made liable to discharge GST under reverse charge mechanism, and the nature of GST to be paid shall be IGST under reverse charge mechanism. Next is another circular, clarification on issue of GST on airport levies. Collection charges paid by airport operator to airlines are a consideration for the services provided by the airlines to the airport operator, and airlines shall be liable to pay GST on the same under forward charge, and ITC of the same will be available to the airport operator. So it is a specific clarification pertaining to the collection charges. And with this, friends, we have concluded our today's session. We will have another session on the same chapter in the next class that is scheduled for tomorrow. But we are still here We'll now take up your queries which are there, and thereafter we'll conclude our today's session. So I believe there are some queries. Sanjay Kumar is saying, but section 15 is not yet notified by CBIC. Are you saying section 15 of CGST Act is not notified? So it is very well notified. Mansi is asking, what is relevance maximum limit of CGST? So Mansi, the relevance of maximum limit of CGST is because CGST is an independent law, SGST is an independent law, every law has to have a clear percentage of tax, and that is why outer percentage of 20% has been mentioned in CGST. Okay, Sridharan, 0.25 is correct. Anirban is asking, so why 0% rate? Why not it is said no tax? What is the difference? So Anirban, if a product is covered under 0% tax, for my understanding, it is still taxable. And if it is still taxable, it means it is taxable at the rate of 0%, and therefore the input tax credit will be available to that entity. However, if we say that it is no tax, or if we consider it as exempt or non-supply, then in such case, no input tax will be available. Mansi is asking why the government has inserted specific clause of reverse charge. So Mansi, there are various reasons, not only tax evasion, like in insurance business, banking business, I told you, I can either look at 10,000 insurance agents, business facilitators, or one banking company, insurance company. So that is better for compliance purposes. Secondly, ease of compliance. Thirdly, because we want to shift liability from the government to the business entity. So multiple reasons. Hiba is saying goods are not covered under RCM. Okay, Hiba, doesn't matter. Still, there are only 5-7 items under goods under reverse charge. Okay, and if they are not covered in syllabus, if you are mentioning, then you may choose to exclude them from your studies. Okay, Shri Raksha is asking, if the recipient located in the SEZ zone, are they liable for RCM under section 9 subsection 3? So Shri Raksha, let me tell you that SEZ entities are entitled for entire tax refunds or 0% tax, zero rating of tax. So first of all, if it is for their authorized supplies, the supplier is not to charge any tax. And even if any tax is charged on them, they can claim that as a refund because they are entitled for 0 rating. Okay, Ravi. Ravi is asking, and clearly for the select. So Ravi is asking, if an author selects forward charge, is he liable to continue for 1 year or 1 financial year from the date of opting? I believe, Ravi, I am not 100% sure right now, and maybe I would request all of you to go back and check. I can also go back and check, but I believe that it should be a financial year. Neha is asking, such securities are not covered within the scope of GST, then why is it taxable under reverse charge mechanism? So Sneha, it is, if you closely see, now you've asked an important question. If you see, it is not securities per se which is covered under reverse charge. It is services of lending of securities. There is a difference between a transaction in securities and services of lending of securities. So both of these are two different things, and hence we need to focus you need to focus as to what is being specifically covered. So here, good that you asked. It could be a clarification for a lot of other people who would have been confused. So I hope it will be clear now that it is not a transaction in securities but services of lending of securities. Nitish is asking, if some services are provided by one GTA to another GTA, then who shall be liable to pay tax? Nitish, in case of supply of services from one GTA to another GTA, there are multiple things that we need to check. And first of all, if you're talking about subcontracting, then of course there will be only one liability to pay under reverse charge, and that will be on the end recipient. But otherwise, there are multiple requirements. If you recall, in case of GTA, let me pull back that slide. In case of GTA, the recipient has to be a factory. A GTA will not be a factory. A society, a GTA will not be a society. Cooperative society, a GTA will not be a cooperative society. Registered person, what if another GTA also says my entire liability is covered under reverse charge, I am not covered registered person, so again excluded. Body corporate, generally they are not body corporate. So the last resort could be they are a body corporate, they are a partnership firm, and in that case, from one GTA to another GTA, I believe let us still wait till we go through the exemption chapter, because there could be an exemption. And lastly, let me tell you, end purpose is that there has to be an issuance of consignment note. And one GTA will never raise a consignment note in the name of another GTA. So that is also a technical exclusion. So what I'm trying to say is, in a GTA transaction, the net liability to pay tax under reverse charge will only arise once, and that is on the end recipient. Great, Sneha. Welcome, Ravi. Any more queries? First chapter, second chapter, third chapters? And can you tell me in the comments how many of you are going back and reading the chapters? How many of you could identify in the last class from that import of service related question that where is it that you've gone wrong? Did it help you or did it not help you? Any query from today's session? I'm still here for all of you because I had thought that we've prepared a lot of discussion for today and it is going to take some time. Any further queries? I'm asking whether chapter 1, 2, 3, if there are no queries, let me just refresh. Okay. Neha is asking, Sneha is asking another query relating to services. Even in case of services, securities are excluded from the definition. Does this have any relevance in this matter? So Sneha, again, it does not have relevance because only securities have been removed. Services relating to securities have not been removed. From goods or from services, it is securities per se which has been removed, right? So what I am saying, suppose I'm excluding this remote from the definition of goods and services, but if I am providing any services for repair of this remote, that is not excluded. The remote is excluded, right? So again, the same clarification, and you can go back and think through. If you think through, your confusion would automatically go away. Security is like I'm transferring share. So share meaning I have 1,000 shares of Reliance Industries. I'm selling that to you. Against that, you're paying me consideration. That is excluded from definition of goods and service because that is a transaction in security. But when we transfer this share, my share broker charges some commission, your share broker charges some commission. Will that also be excluded? No, because that is relating to securities. So the same thing is here, okay? Mansi is asking, last class question helped me a lot, but in question number 2 of imports in previous class, why services from friend is not request supply? Mansi, because friend is not a related person. You go back and search out for the definition of related person. Can you say your friend is your relative? That is why. See, it's confusing, right? So you get an impression, your subconscious mind is tricking you. Your subconscious mind tells you, friend, okay, related. But here we have to stop it and think from analytical mind, legal perspective. Definition related person में आएगा क्या? Friend. ऐसे तो फिर हर दूसरा बंदा फ्रेंड बन के रिलेटेड पर्सन बन जाएगा, रिलेटेड पार्टी ट्रांजैक्शन बन जाएगा. So now think it from this perspective. Can a friend be treated as a related person? No. Nitish Gupta. So Nitish, this is indirectly asking to revisit the entire lecture. Sorry, that I cannot help. He's saying, please summarize the list of reverse charge services. Okay, just let me see if there are any further queries. Okay, welcome Sneha. Venkat from Hyderabad is asking, CGST goes to central government, SGST goes to state government, and on the other hand, how IGST will be shared to different states? Or Venkat, IGST is levied and collected by state government. So let me give you an example. I am a chartered accountant. I am based in Delhi. I provided some services in Delhi. I'll charge 1 lakh rupees was the invoice value. I'll charge 9% CGST and 9% SGST. 9% CGST will go to central government. 9% SGST will go to Delhi government. Now, from Delhi, I provided some services to Venkat in Hyderabad, that is Andhra Pradesh. Again, 1 lakh rupees of invoice, 18% of IGST. This IGST, the central government will collect and keep it with itself. They will identify the destination state where Venkat is located, Hyderabad. Hyderabad means Andhra Pradesh. They will break up this 18%, keep the 9% portion with them as CGST, and the balance 9% portion, they will give it to Venkat, who is the recipient of such services. So they will not give it to Venkat, they will give it to Andhra Pradesh government. They will give this 9% to the Andhra Pradesh government. Okay. And again, from your query, it is coming out, you are talking about sharing between states. It's not sharing between states. GST is a destination-based tax, I told in the first class, and the entire tax proceeds pertaining to the state's revenue share will go to the destination state, go to the destination state, go to the destination state. And why am I repeating 3 times? Neither is it a technical issue, nor I am an Ekta Kapoor fan. I am repeating 3 times because where I see there is certain query which needs to be completely clarified from your mind, I will repeat it 3 times so that every one of you will get slightly irritated, and then it will trigger a memory cord in your brain. Okay. Any further queries? Okay. Chalo, since we have time, I will quickly summarize the reverse charge services for you. But let me tell you, I'm doing this one time because we have some time. Otherwise, I do not promote this again and again revision. You are supposed to revise. I am not supposed to revise. Okay, please. Because we have a vast course to cover. Okay, sometimes this may happen. We'll cover late. Sometimes we'll. So, but today, since we have time and your queries are not coming up, not much queries are coming up, I am just quickly re-summarizing all these services. So the services covered under reverse charge are GTA services, Goods Transportation Agency service. In this case, it has to be a specified recipient and the supplier has to be GTA who has not paid tax at the rate of 12%. Then legal services by advocate, the recipient has to be business entity. Then services supplied by an arbitral tribunal, the recipient has to be same as above, that is the business entity. This is a summary of GTA. Sponsorship service, I gave you the IPL example that the supplier of sponsorship service is BCCI, recipient is the company and that company has to pay the applicable GST under reverse charge. Similarly, when services are supplied by central government, state government, union territory or local authority, the governments are not liable to pay tax. The recipient business entity is liable to pay the tax. In case of renting of immovable property, by whom? By the central government, state government, union territory or local authority. It is the recipient registered person who is liable to pay the applicable tax under reverse charge. Similarly, services offered by a director to a company, the company is liable to pay under reverse charge. Insurance agent, the insurance company is liable to pay under reverse charge. Recovery agent services, the banking company is liable to pay under reverse charge. IPR rights for a copyright content under section 13(1). Be it an author, music composer, photographer, artist, it is the publisher, music company or producer liable to pay tax under reverse charge. For author, there is an option that he can charge the tax under forward charge, but there are certain conditions. He needs to obtain registration, needs to file a declaration, needs to continue for a period of 1 year. What is this 1 year? Financial year or calendar year? That you have to check, go back and check. And he also needs to make a declaration on the invoice. Next, member of our overseeing committee of RBI. RBI is liable to pay under reverse charge. Direct selling agent of bank or NBFC, bank company or NBFC is liable to pay under reverse charge. Business facilitator providing services to banking company is liable to pay under reverse charge. Agent service, business correspondent is liable to pay under reverse charge. Security service, supplier is any person other than company and the recipient is registered person liable to pay under reverse charge. This entire clause not applicable on whom? Central government, state government, union territory, local authority, government agency or composition person. Transfer of development right or long-term lease of land by any person to a promoter builder. The promoter builder is liable to pay under reverse charge. Renting of motor vehicle to a body corporate. By whom? By someone who is not a body corporate, charging tax at the rate of 5%, availing ITC of similar line of services. It is the recipient company who will be liable to pay the tax. Of course, the recipient company has to be situated in the taxable territory. Similarly, services of lending of securities, services of lending of securities and not the securities themselves. So the services of securities, lending of securities, it is the lender, it is the borrower who has to pay the applicable GST under reverse charge. And with this, friends, we have again quickly reviewed the services which are covered under reverse charge. And even if I repeat 10 times, at the end of the day, you will have to go back, you will have to study. Some things you will have to mug up. There is no option. Only then and then you will remember, recall and perform best in your exams. In one class, I will also share some tips which I personally think can help you perform better. These tips would be completely personal in nature. So there is no linkage of it either with our institute or the board of studies. It will be completely personal experience, sharing some things which worked for me and which I'll be happy if they can help you in performing better for your exams. But let us complete some good amount of course and then we will discuss. Okay, so once for the last, I'm asking if any query for any person, then please let me know. And otherwise, we'll conclude our today's class and we are well placed to cover our session the next ensuing class. Okay, so since I do not see any queries, I would once again request all of you, see there is not much time, and if you are appearing for November, there is too little time right now. So whatever you've studied today, please go back, please read the relevant board of studies portion, your study material portion. Come back tomorrow. If you study tomorrow, between today and tomorrow, it will get set in your mind. You will still have some bandwidth to ask your queries if there is anything that you've not understood. Okay? But if you miss this bus and later on if you study, let me tell you, it is going to be a disadvantage. So please help yourselves. Please allow me to help you. And please go back and read this chapter today. Okay? Even better, go ahead. Read what we are going to discuss today because we are going to discuss balance of chapter 3. Keep a tab on me, keep a check on me, and you can step in and say, sir, okay, this is also what we want to discuss, this is what we want to do. So I promote that, I promote an engaging discussion and not just monotonous discussion, one-ended discourse. I see a good amount of queries are coming up in every class, around 50, 60, and I would further want to promote it. Let this go up to 100 queries. Okay, because GST, at least my personal bent is, whatever I have been able to accumulate in the last 10-15 years, I can at least share that with you freely, and I'll be more than happy to see all of you coming out with flying colors. Maybe some of you will come forward and make a career in indirect taxes. So with that, I rest my discussion for today. Of course, it's on Sunday evening. So thank you each and everyone, and we'll be completing the rest of our chapter tomorrow. Good evening and all the best to you. Thank you.